Oh my gosh, PayPal stock is absolutely crashing as I'm recording this right now. Today, during the trading day, it was down about 3%. Just look at this chart real quick, actually, of the S&P 500. This was a huge risk-off day for the market. The only sectors that were green, consumer defensive, healthcare, utilities. That's pretty much it. Insurance was a little green as well, but everything else was down massively. It was a massive risk off day for the market. Anything that was AI related, anything that was tech related sold off massively. And PayPal was not safe from the sell-off. And then they reported their Q2 earnings today after the bell, and the stock dropped by another $5 a share, and it's down over 7% just in the afters, which puts the total drawdown at over 10% on the trading day. So we're going to get into the numbers. We're going to talk about what I liked, what I didn't like, and what I'm doing with PayPal stock specifically as a result of these earnings. But before we get into all that, if you're new here, welcome. I'm Austin. I'm a co-owner at cloudmusicsuite.com. I'm a stock market investor, and most importantly for this video, I'm a PayPal shareholder. I just started buying PayPal stock about 2 months ago. I'm still building my position, so I was obviously very excited for today's earnings. Real quick, the channel's sitting somewhere around 1,300 subscribers. Thank you so much if you're back. If you're new, go ahead and hit that subscribe button. It means the world to me. And as a thank you for doing that, here's a picture of both my cats, Millie and Luna. Millie's the gray one, Luna's the brown one. And real quick, I don't want to talk about them in this video much, but if you've been a watcher of the channel, you've seen multiple pictures of these girls. I know you haven't met my cats, but Luna is actually in the ER right now. She's in the little kitty cat emergency room. She's in critical care. I might make a community post about it to talk about it, but things are looking up and she's looking pretty good. So any positive energy sent our way would be much appreciated. Thank you so much. Okay, now that we got all that out of the way, let's get into these PayPal earnings. First of all, I think this earnings report is very, very positive in so many aspects, and I think this drop in the share price is way overreaction. I made a video on the channel that said PayPal stock would soar. That obviously aged terrible, as we've seen a terrible, terrible day today. And this is the day that I thought PayPal was going to start to move up in a massive way. So on a year-to-date basis, the stock's down. Before today, it was down about 2% year-to-date. Now it's down about 8 to 9% year-to-date. On a one-year basis, it's also down over 25%. On a 5-year basis, it's also down over 14%. There's been so much fear and uncertainty and doubt priced into PayPal already. I thought the odds of us dropping after this Q2 earnings were so low, but clearly I was wrong. This is a stock that's trading at a 32 trailing PE, while the forward PE is less than half of that at $15. And it's going to be even better than that because they raised their GAAP EPS guidance for full year 2023 in this earnings report. It's already substantially lower than its 5-year average PE. 5-year average PE is somewhere around 55 for this company on a trailing basis. We're at a 32 right now. So it's heavily discounted on that metric already. And with that EPS guidance raise, it's just going to look better and better, and that forward PE being less than half of the trailing PE is so attractive right now. Let's dive into these numbers. We'll talk about what I liked and what I didn't like. So as it relates to the headline numbers, they grew total payment volumes by 11%. Net revenue was up somewhere between 7 and 8%. GAAP operating income was up to $1.1 billion. I was looking for anything above $1.05 billion, so I'm excited about that beat. And on a GAAP basis, that's a 48% increase on a year-over-year basis. And on a non-GAAP basis, they had $1.6 billion in operating income, growing 20%. And then on GAAP EPS, we had a big beat up to 92 cents. 83 cents was the high end of the range that was guided for. And that's from the PayPal management team, so they beat that in a nice way at about a 9-cent beat per share. And obviously we talked about this, they actually had a GAAP loss in Q2 of 2022, so I knew for sure that it was going to look absolutely insane on a year-over-year basis because they did take that loss, so that's like a 400% increase. So just for this one time, I'm going to look at the non-GAAP numbers. I normally like the GAAP numbers, but looking at the non-GAAP numbers, we had $1.16 of non-GAAP EPS this quarter, and that relates to 93 cents last year this quarter on a non-GAAP basis, which is up 24%. So right off the jump, seeing revenues grow by 7%, but operating income grow by 48% and then 20% on a non-GAAP basis, and then GAAP EPS growing 400% on a GAAP basis and 20+% on a non-GAAP basis, that's extremely bullish. We always want to see earnings growing faster than revenues, especially with a company that is in a little bit of a slower growth cycle. PayPal's very much an established business. They're not necessarily a massively high growth company anymore. So the focus has to be around margins, it has to be around EPS beats, and it has to be around EPS growing at a substantially higher rate than revenues. Here's the first bad thing that we see. Operating cash flow and free cash flow were negative at $200 million for operating cash flow in the negative and $400 million in free cash flow for the negative, which is obviously terrible, but that does include that $1.2 billion negative impact from those buy now, pay later loans that they actually sold. They announced that a few months ago, and they let shareholders know that they were going to increase their buyback by over $1 billion as it relates to that. So although that looks not great right now, it's going to lead to a great Q3 as it relates to free cash flow and operating cash flow. Now let's move on to guidance for full year 2023. They're expecting an 8% growth in net revenues. They're expecting somewhere around a 14% in non-GAAP EPS, and they're expecting 85 cents to 87 cents as it relates to GAAP EPS. Don't be surprised if they come in and beat that by another 6 to 9 cents, somewhere around there for Q3. And then the full year GAAP EPS is expected to be $3.49 as compared to $2.09 in full year 2022. So about a 75% increase on that GAAP basis for EPS. And then on the non-GAAP basis, they're still expecting the same projection, $4.95, and that will be a 20% growth on a year-over-year basis. And then this is huge. They've now said that there's going to be $5 billion of repurchases of stock for full year 2023. PayPal fully understands how undervalued their stock is right now. So they're doing what a good management team does. And when the stock price is heavily depressed and the valuation metrics are heavily depressed based on the company's fundamentals, go ahead and buy back shares. Tons of management teams actually buy back shares when it's a very, very, very bad time to buy back shares, when the stock is nearing all-time highs. I absolutely hate when companies do that. I love when companies do it when the stock price is heavily depressed. It goes a long way for increasing shareholder sentiment around the stock. So real quick, let's get away from the numbers for a second and let's talk about the CEO. One thing I was looking for was any commentary around the CEO transition. The current CEO, Dan Schulman, said that he plans to retire by the end of 2023. And then today he said he's going to continue to serve on the PayPal board of directors as he exits for CEO, so he can kind of help out and make sure the new CEO is acclimated and they know what's going on. They know how to run the business, so they're not just left out to dry. So Schulman's still going to stay on the board, which is a nice thing to hear. And then in the earnings call, he said, we're in the very final stages of the process with several outstanding candidates who are all highly qualified and excited to lead PayPal as we go into our next chapter of growth. By the way, that next chapter of growth is continuing to grow Venmo and continuing to grow Braintree and accelerating growth at Braintree. That's their unbranded business-to-business side payment handler that they acquired about a decade ago. Let's talk about the balance sheet real quick. PayPal's total assets dropped by about $4 billion and their liabilities dropped by about $4 billion. So the balance sheet is not in an insanely better spot than it was 6 months ago as we compare that to the end of 2022 in Q4. So no real massive news as it relates to the balance sheet. One thing I was looking for was a little bit of a debt pay down. I would like for them to use some of that share buyback money and pay down some of this long-term debt. There's really no need to keep $10 billion in debt right now in these high rate environment times. It's the highest rates we've seen in over 22 years. We don't need to be keeping $10 billion in long-term debt right now. Let's go ahead and pay some of that down. We actually had an increase a little bit as it relates to 6 months ago in long-term debt. It's not a substantial increase, but it was an increase. That was one thing I didn't love. As it relates to net income, we obviously had a massive beat on a year-over-year basis. So right here we can see 3 months ended on the left, $1 billion in net income for Q2 of 2023 as it relates to $340 million of a loss in Q2 of 2022. And then 6 months ended $1.8 billion in net income so far this year. And at this time last year, they had $168 million in net income. So the net income situation is in a way better spot this year than it was last year. We already knew that was going to happen, so this shouldn't come as a surprise to us. Two more negative things as it relates to PayPal for this quarter is that one, they had another contraction in active accounts. So at the end of 2022, they had 435 million active accounts. Q1 of 2023, 433 million active accounts. And then Q2 of 2023, which we just reported, 431 million active accounts. Yes, that's up on a year-over-year basis in a very, very minor way, but it's down from 6 months ago, which we don't like to see. I would bet this is on the back of that weird thing where they said they were going to charge people like $2,000. A bunch of people got very mad with PayPal, and I would bet that they're still seeing some of the effects of that with people not using their PayPal account or completely deactivating their PayPal account because of that weird terms of service agreement that they very quickly went back on. I had actually forgotten about this, and a YouTube commenter reminded me of it, so thank you so much for the person that commented that. But I would bet money that this 4 million decrease in active accounts is because of that little terms of service snafu they had and that really poor guided decision that they made. And then the last thing that was negative that I saw in this earnings was the adjusted operating margin from PayPal's management team was expected to be 22% in this quarter, and it came in a little bit short at 21.4%. Is a 0.6% miss enough to make a stock fall by 10%? Maybe not, but with this further decrease in active accounts, I can see those two things kind of coming together to paint a kind of a negative picture around PayPal's future, along with the negative free cash flow and negative operating cash flow. I can understand why the stock dropped by 10%, but so many other metrics were in an amazing spot that I think the drawdown today was a little bit overreaction. This has been the story around PayPal stock, and one of the reasons it's been selling off so much. One, of course, the CEO transition and a lot of uncertainty around the CEO transition. That is not uncommon for a stock to fall in a massive way when a CEO transition is announced and leading up to the announcement for the new guy or new girl. And then the other reason it's been down so much is that margin contraction. We don't want to see margin contraction, and they guided for a 22% margin, which was a contraction, and then they missed that down to a 21.4. And this is mostly on the back of business loans not being in as high of demand as they expected them to be, which makes a lot of sense. We're in a really high rate environment time. To see weakness in business loans does not surprise me at all. Some people think we're teetering on recession. If a business owner thinks we're teetering on recession, they're probably not going to go ahead and take out debt in this time, especially now that we have rates at over 22-year highs. And that's one of the big reasons that the stock sold off after hours. Okay, so what am I doing as it relates to PayPal after this earnings? I am still going to be a buyer of PayPal. Nothing in this earnings report is like end of days, terrible, crazy, awful for me. There were some things I wish they did a little bit better on, but they beat my expectations in quite a few areas that we had talked about earlier in this video, and they provided nice commentary around the CEO. I really would have liked a CEO announcement, but maybe they'll do that in the middle of Q3. We'll see. But increasing shareholder sentiment around PayPal is going to be massive. The $5 billion buyback was nice. That's a good step in the right direction, but I actually want them to use some of that cash to pay down that long-term debt in these high rate environment times. I'm still positive on the shares I did buy that I started buying about 2 months ago, but I'm actually going to continue buying. It's going to bring my cost basis up a little bit, but this pricing is a lot better than the pricing I would have gotten just 1 day ago before the stock dropped by about 10%. So guys, I'm going to remain a buyer of PayPal probably all the way through the end of this year, maybe even into Q3 of next year. We'll see. I'm not buying massive blocks of shares at once because of potential situations like this. I knew that it was a possibility for PayPal to drop in the short term. That's why I haven't gone all in and put all my money in at once. I'm slowly buying a very small amount of shares, sometimes every single day that the market's open, sometimes once a week. It all depends on where the share price is in that moment and how much cash I have available that I want to put into PayPal stock. So I'm still buying. I'm going to keep on buying for quite a while. This earnings does not change my outlook in a major way. Like I said, they beat on some numbers, they missed on some numbers. That margin story just got a little bit weaker, and they're really going to have to prove themselves in Q3 and Q4, but the EPS is killing it, the operating income is killing it, the revenues are killing it. I'm super happy as a shareholder right now. I'm going to continue to pick up shares, and I feel blessed that we've gotten another little bit of a pullback so I can add more shares of PayPal. I'm definitely looking forward to Q3 earnings, and I'm definitely looking forward to the CEO transition news that is inevitably going to come. I want to know what you're doing out there, and more importantly that, do you think that this was a warranted drop? I'm sure someone out there thinks this is a warranted drop. If you do, I want to hear about it in the comments below. If you don't think it was a warranted drop, I want to hear about it in the comments below. What's your plan with PayPal shares? Are you buying more? Did this make you want to sell? Are you just going to be a holder? What's the situation? Are you shorting the stock? Some people might be shorters. I want to hear about it. Let me know in the comments. That's one of my favorite parts of posting here on YouTube, is looking at the comments, having some conversation with you guys. So go on down there. Let me know what you're doing. Thank you so much for being here, and have a great day.